Hello, everybody. It is Mike Young with Mike Young Real Estate. A lot of you may also know me if you're in the Raleigh Triangle area from the trianglegrapevineorg groups that I founded, and we run with the great volunteer management team. Shout out to the moderators out there. And if you want to find out more about our groups there in Raleigh before I go on with this video about mortgage rates, please go to trianglegrapevineorg. Click on groups. You'll find our groups, the biggest of which are Wake Forest Community Information, which has like 53,000 plus people in it, and also Raleigh Community Information, which has 35,000 plus people in it. Those can be found at wfci.one and rci.one. So let's get into today's video. As you guys know, I'm a realtor in the Triangle, Raleigh, Wake Forest area, and that's why we have all those groups there as community resources for all you guys. They are like the largest, most active, like hundreds of thousands of interactions per month in some of the groups. Most active groups, you can ask any questions you want as long as it's within our guidelines. Check those, they change all the time, but it's basically a great community resource for any kind of question you want to ask out there that's not so obvious. You can get tons of answers from your neighbors, which is really cool. So let's get into mortgage rates. It is Wednesday, July 15th, 2020. Now, even if you're not watching this video at this time, which is just after COVID-19 and the pandemic, this is going to apply to you because I'm going to talk about when it makes sense to refinance. Now, if you're a home buyer, someone looking to buy a house, of course, now is an awesome time to buy because you can get rates below 3% on a mortgage. Now, what if you've already got a mortgage? That's what this is, the main topic of this video is. If you've got a mortgage and you want to know what to do with it, if it's time to refinance, how do you tell? What do you do? Well, first of all, I want to say that in order for someone to easily tell if it's time to refinance, you first need to ask the first most important question: do I need a lower payment? All right, because if you absolutely need a lower payment, meaning you're in trouble right now, then you should probably refinance no matter what else I say in this video. Now, that's obviously not the best situation to be in. We hope that you're not in that situation, but if you are, absolutely get some quotes. I would get a couple quotes from mortgage folks and go ahead and refinance because now is a great time to do it. You can't go wrong if you need to. Now, what if you don't need to and you just want to save money, meaning you want to build up your nest egg quicker? You want to pay more to principal every month. You want to pay less in interest. You want to get rid of the PMI. You want to build up your nest egg for retirement, that kind of thing. This is part of that financial plan. This is the reason why this video is so important. And it really applies to anybody that wants to or does have a mortgage right now, because even if you don't have one right now, you should know this so you know when it's time. Because I'm not saying I have any clairvoyancy. I don't know if rates are going to go up. I don't know if they're going to go down. I can tell you they will either go up or down. But I don't know if this is the time to lock in that 30-year fixed rate with all the points and everything else going on. And that's going to be a lot of what this video is about. Is going to be talking about points and payments that you may or may not need to make when you refinance your mortgage. Now, let me say the quickest and easiest and smartest way, in my opinion, since we cannot predict the future, of knowing when it's time to refinance is to run the numbers. You're going to get your mortgage payoff amount, which is about approximately your mortgage balance. You're going to find out what kind of loan to value ratio you have, because if you have at least 80%, at least 20% equity, so it's an 80 to 80-20 loan, you'll get the best rate in terms. If it's less than 20% equity, we got to look at some other things. But the bottom line here is you need to know those things, because that's going to determine where you fit here. And of course, your credit rating, because your credit score, your credit rating, however people describe that, that is going to determine what best rates you're eligible for. Hopefully you've been working on your credit, and if you have, awesome. If you've got over like a 740, you're probably going to get like the highest, and that is the highest, one of the highest tiers above 740. You'll probably get the lowest rates. It's actually inversely related. So hopefully let's go with a couple of assumptions. I never like to assume, but let's assume you got the highest credit score. Let's assume you got 20% equity at this point in time. How do you know if it's time to refinance? Just because it can lower your payment doesn't necessarily mean it's going to save you any money, because think about it. Let's say you took out a 30-year mortgage 5 years ago. Well, if you take out another 30-year mortgage, of course the payments are going to be less. Why? Because you paid down some principal. You've probably seen the benefit of some appreciation, so you've got some extra equity in there. You get a lower LTV, higher equity in your loan, so that's less of a risk for the mortgage company. So of course. But you're also going to extend your payment another 5 years. And who wants that? On the off chance that you end up staying in this house and keeping this mortgage for the rest of the term, which is, we'll get into that too, it's not likely, but in the off chance that you do, you're going to end up paying for another 5 years. So you don't want that. That is not necessarily going to save you any money. So someone like you, let's say you've been in your house for 5 years. We want to look at another option. We want to compare rates and payments for a 20-year or a 25. 25 is hard to find, but a 20-year, yes. If you can, now in my mind, if you can keep the principal and interest, you can forget about taxes and insurance for a moment, because we're really only dealing with PI. There's PITI, principal, interest, taxes and insurance, or there's PI, and that's really what we're concerned about, is the PI. What's the PI on your current mortgage? What's the PI on the next one? If you can keep it the same and drop your previous 30-year term, which is now 25 years, down to a 20-year note, and keep the payment the same, then absolutely do it, with one caveat. Don't pay any money to refinance, because if you're paying money out of your pocket to refinance, then we're not really comparing apples with apples. We're comparing something else. And my guess is you probably paid money to get your first mortgage, which I personally don't believe in. You can do whatever you want. I think that money would be better spent elsewhere, maybe on things you need for the house, or to invest in different and newer and more diversified investments. That's what I would say. I'm not a big fan of paying money to your mortgage company unless it's part of your PI every month. I wouldn't suggest it, but again, it's your choice. But in this case, we want to find out what's it going to cost to do a no-cost, zero-cost refinance loan. Now, how are you going to find that out? Well, there is basically a term you're probably familiar with if you know about mortgages, called points. And there are 0-point loans. There are some points with 1 point, some loans with 1 point, some loans with 2 points. You've probably heard of all those, right? What's a point? Point is 1% of the loan amount, not the value of the house, the loan amount. And you have to pay that out of your pocket when you go to settlement on the mortgage. Remember, a mortgage settlement is actually a separate settlement from a purchase of a real estate property. So when you go to settlement on this mortgage, you're going to need to pay, you're going to cough up 1%. So on like a $300,000 home, or let's say $300,000 mortgage, let's say the house is worth $400,000. I'm just rounding off here. So we're doing like a 75% LTV. Let's say it's $300,000. You're going to pay $3,000 out of your pocket as a point. That doesn't even count the attorney's costs, any kind of recording fees, any kind of other mortgage fees from the bank that go along with that. There could be all kinds of costs. So this can add up quickly to thousands and thousands of dollars just for the privilege of refinancing your home. So I don't think that you should pay any of that. What you want to ask for is actually a negative point loan, more commonly known as a zero-cost refinance. Now, a lot of times basically you can get anybody to do this these days. I've been doing this for decades. I'm 50 years old, and if I had the same mortgage from when I bought my first house, when I was, 22, I was 22, it would be almost paid off in 2 more years. But I don't have that mortgage. I don't have that house anymore. Unfortunately, I would highly recommend you hold on to your real estate. The lesson learned. But like I said, I'm over 50 years old now and would have been paid off. But in this case, what you want to do is you want to, and I guess I've been doing this for decades, say, hey, I want a zero-cost refinance when you go to your bank, either online or in person, or your human being you talk to. Zero cost. Now, either they'll give you a package where they say, all right, we're just going to bump your rate up by this a little bit. That's how they do it. Instead of you paying money for points, instead of you paying no points, they're going to give you money. In order to give you money, they have to bump up your rate a little bit. So even in today's market, it really shouldn't be much over, a hair over 3%. That's about it. Instead of being a little bit under 3, you'll be a little bit over 3. But really, it's not going to make that much of a difference. The average person only holds their mortgage for about 7 years, just so you know. That's average. It doesn't necessarily apply to your case. But in your case, you're going to ask for no cost refinance. So they'll handle it in one of 2 ways. First is they'll say, okay, for 3.25% at 20 years, we will keep your payment the same. Let's just say, hypothetically, say it stays the same. But of course, you're chopping off 5 years at the end, which is awesome. Not only are you chopping off 5 years at the end, but you are going to be building up equity much higher, at a much higher rate than you have on your older loan that ends in 25 years. So you're benefiting in 2 ways. Even if you don't keep it till the end, you're still benefiting. This is why we want to keep these benefits in front of us so we know what we're getting. So they'll say, all right, well, no money out of your pocket. We'll pay for all the costs. They'll pay for any points. They'll pay for any lender fees. They'll pay for any recording fees, attorney's fees, et cetera, et cetera. You strike a deal with them. Some people will strike a deal with you. Great. So they'll negotiate for the lowest fees, and you won't have to worry about anything. All you got to do is sign some documents, like a whole stack of them, okay, in order to get your loan refinanced, and then that's it. Another way to do it is to say, like, hey, I want a negative point loan. Give me one negative point, negative 1 point. So on a $300,000 loan, they're going to give you $3,000 cash at closing. A lot of lenders will let you keep the extra if you have not been able to use it. Some of them won't. So check with their specifics on that. You definitely want to check with specifics, because some lenders, it all depends on the specific lender, whether they allow it or not. But let's say you get $3,000 back. Is that going to be enough to pay your attorney's fees, recording fees, any kind of fees charged by the mortgage company? Well, find out. You got to get to an estimate. There's an estimate of fees that you can get that all mortgage lenders are required to provide if you ask for it, where you can compare loans and it'll have all those fees in it. And if you know them, then you can, shop around for your attorney, get a lower rate potentially, shop around for some of the fees that can be shopped around for, like an appraisal, things like that, potentially. But at least the attorney fee you can shop around on. And maybe you can end up with some cash in your pocket by going to settlement. That's always a good feeling, okay? Especially when you're going to cut your loan rate, your loan term down, and potentially even save a few bucks a month on the payment. So does that make sense? If it does, or even if it doesn't, leave me some comments here. Let me know your experience with refinancing. If you've ever done one like this in the past, if you recommend it. I mean, I've done many of these in the past. This is the only way I knew that I was saving money for sure. And it doesn't matter if you sell your house or you get a new mortgage or you refinance, 6 months down the road, the rates could drop another 3/4 of a point. Who knows? And then it might make sense again for you to refinance. You don't want to risk that, because we cannot predict the future. And the way things are going right now, we may be in the negative interest rates. I really have no idea. I've never seen this before. I'm sure you haven't either, unless you've been over in some parts of Europe. But we may be heading into a market like that. So not knowing that, please, I would say do it the smart way. And this is a smart way to do it. Get that estimate. It used to be called a GFE, good faith estimate. I believe now it's called an LE, loan estimate. It's a document that is required to be provided per the U.S. federal government. If you ask, most people never ask. I would say you get a couple quotes, get a couple of LEs, compare them side by side, and then lock in. And then when you do lock in, you may be required to pay for your appraisal or something like that at that point. No problem. Also, before you lock in, you would like to ask for a free float down, because rates are all over the place every single hour, every single day. They're constantly changing. You don't know if they're going to go up or down. But if they go down, you don't have to go through this whole process again, especially if they go down before you go to settlement, right? So ask for a free float down. They should be able to provide you that at least one time. You'd have to make the call, because usually with the rates, you lock it in at the time you pay for your appraisal, and it's locked. And then you might have one chance. If the market has lowered, you will be able to take advantage of those as long as you're a certain number of days out from your settlement, because it can't be done like within 12 hours of your settlement. They can't redo the paperwork. At that point, it's too late. So find out when it's too late, when you can do that, because we're in an environment where the rates seem to be dropping every single day. The last 3 days they've been dropping the record lows every single day. Now, I don't know if that's going to keep up. Don't know what's going to happen with the markets. But again, this is you trying to be smart with your money, me trying to help you out. And please pass this along to anybody that's thinking about refinancing. Tag them in the comments here. Share the video. If they're in the Raleigh, Wake Forest, Triangle, Metro area, have them join our groups. We got all kinds of great discussions going around. And of course, I do real estate in these areas. So if you need any help with real estate, by all means, contact me. And you can find me. I'll give you my direct mobile. It's 240-205-0417. You can text me, call me. Find me here on Facebook, Mike Young Real Estate. I have a page there, and actually I'm the administrator of all of these different groups under grapevineorg, so you can click through and find me there. I'm always welcoming new members, so you'll see me there as well. So bottom line is, this is the time to refinance. I have a hard time timing most things, like most individuals do. As you know, they say never time the stock market, because most people are wrong. But I can tell you when things are cheap, and right now the money's cheap. The funding is cheap. You do not want to wait if you don't have to. Refinance at zero cost, so you can refinance again in another 6 months if they drop another point, and they might. Who knows? I have no idea what's going to happen. Right now, the markets are being propped up with all this quantitative easing, and it may continue. And if it does, we may very well go into negative rates on the Fed side, which will not give us negative mortgage rates, but it will give us, again, record low rates, which you're going to want to take advantage of. And one other thing that you might want to consider when you refinance or with any mortgage loan is your escrows. Because with your escrows, I don't know if you know how that works, but the bank basically holds your money for taxes and insurance. Usually if you have an HOA, you pay that outside of your mortgage payment, but taxes and insurance, that's why it's PITI. The TI is usually in an escrow account that you pay in advance, and it just sits there most of the year until these bills come due, and then the mortgage company pays it. However, I would recommend if you have good credit and you are responsible and you don't spend your money whenever it gets in your hands, that you do away with that and say, hey, I don't want an escrow account. They may try to charge you money for that. They may try to say, hey, we're going to charge you 1/4 point if you don't want this escrow account. We'll give it to you, but at a price. And it may be worth it at a 1/4 point. I wouldn't pay any more than that, and I would try to get it for free. I would try to say no escrows, especially if you're in an 80-20 or higher rate of equity than 20% equity. You should almost get that for free because you've already demonstrated you're responsible. You're not going to walk away. Why would you want to, like in a 50% mortgage, 50% LTV, walk away and lose half the money in your house? You wouldn't do it. You would pay these things. You would not let this stuff go into foreclosure. And by the way, in North Carolina, just so you know, pay your HOA fees. HOAs can foreclose in North Carolina. That has happened. We've seen stuff on Wake Forest Community Information where people have actually bought houses at auction through foreclosures as a result of people not paying their HOAs, even if it's just everything else is current. And then they supposedly have some rights to the house, and it's a gray area in the law. You'd never want to get into that, but by all means, pay them. Don't get behind because you could lose your house. As crazy as that sounds, for not paying your $40 a month or whatever you need to pay to your homeowners association. Again, any other questions, let me know in the comments. I think we've covered it all. And I may be doing a follow-up video on this. And this stuff, even if you're watching it 3 years from now, this stuff still applies. As long as there's mortgages out there, and as long as people, keep wanting to get the best deal and don't like throwing their money away or flushing it down the toilet, these refinances are going to be a thing. And we may end up even with longer term rates. I think that 40-year mortgages have become somewhat popular now, at least way more popular than they were in the past when they weren't even available. So we've got all kinds of lengths too. Don't be held to the 30. 40, 30, 25, 20, 15, 10. All these things are possible depending upon the lender. Shop around, use the internet if you need to, and message me. If you need any help, any particular specific questions, send me a message on any of this stuff. Free advice, no problem. I'm in this business. I love this business, and I would love to help you guys out in any way possible. Love the community as well, and that's why we have all these community groups together. We try to provide as valuable resources as possible and make living here as fun as possible, basically. And hopefully this video will allow you to do that, have more fun with some extra money from refinancing. So have a great rest of the day, and I hope to talk to you soon. Bye-bye.